All right. What's up, everybody? Happy Thursday. Welcome to another episode of Chart Request Live CRL. I'm Spencer Israel. That's Steve Straza over there to I guess he's on my left. Straza, what's up, man?
How you doing, buddy?
Oh man, you and I are on the same wavelength today because the show is called CRL Chart Request Live. So if you have a question, drop it in the chat. We will take a look at what you want to discuss, but me and you, all we want to discuss is NVIDIA.
I mean, listen, this is a historic earnings report.
Oh yeah.
Like I was telling Fonz this morning, you're not going to see earnings reports like this. It's just crazy. It's just wow. And I just want to keep talking about it and keep looking into it. So if you are interested and you want more semiconductor, more AI, more NVIDIA conversation, Spencer and some friends will be joining me in an hour at 2 o'clock on Twitter Spaces, where we're going to do all things NVIDIA there.
Yep. Okay. Do you want to pull up an NVIDIA chart real fast and then we'll go to the chat?
Yeah. So what I have here, you can see is my chart up?
I'm on a delay, so I don't.
Yeah, me too. All right. So
just assume it's up.
all right. So right here we have NVIDIA's price chart in the top panel here. Just flipped it to candlestick so you can see that beautiful gap up today. And then this is the market cap here, right? So NVIDIA, just late October last year, around 300 billion market cap. Today it's over $1 trillion. So this stock has really moved, a long way in a short period of time. And just, with today's earnings reaction, we tacked on about 200 billion. Let's see where we close, but it's a little under 200 billion now. It was closer to 200 at the open, but the point being, it's massive. It's huge. I was joking with JC this morning. He's like, it's like bigger than Intel. It was almost 2 Intels at the highs this morning. So big move. And that's what happens when, you change your revenue guide from 7 billion to 11 billion, right? That's
for 1 quarter, mind you, for 1 quarter.
Very material. So Spencer, to me, like, just to mention it real quick. So NVIDIA up 30% today is actually cheaper on any revenue or earnings valuation metric. I'm talking about things like price to sales, price to earnings here. It is actually cheaper today because the denominators of those ratios changed so much in their favor.
That is mind-blowing.
Right. And really, that's a good reminder for people too, right? Whenever you look at a company and say, oh no, the valuation is too high, how could they have a PE multiple of 80? All that's really telling you, it's not telling you that the market thinks that their PE multiple is 80. It's the market telling you that they think that the earnings estimate in that PE equation, is simply incorrect. And then usually you find out with hindsight that it is incorrect. And that's really just what happened with NVIDIA between yesterday and today. The analysts and even the company itself had to really up that guidance. And now you're seeing that valuation, come down a bit. So fascinating.
Yep. All right, we'll talk more NVIDIA on Spaces at 2 o'clock. But this is Chart Request Live. Request being the key word there. So I see some tickers on the chat. Let's get to those. What?
Who wants what? Let's talk about it.
Who wants what? What's up, Yako? Let's do for H Chan, we'll do CPA, Copa Holdings. This is I should know this, but I don't. What is this? This is an airline. Okay.
Really?
Yeah, just under $1 billion.
Copa.
Oh no, I'm sorry. 4 billion. 4 billion airline.
Is this one of those Mexican airliners?
Yeah.
Is it really?
It is. I think maybe South America. Yeah.
I knew it. Copacabana. There you go. Boom.
There you go.
Caribbean. Yeah, sure. You can play this. We got some levels here. Here's how I would draw this. Let's see where the fibs line up. You got that big drawdown from COVID. Yeah, look at that. Beautiful. Love it when they work like that. So this is your level, right? And that's exactly where I would have drawn this resistance line too. So the fib is really just reinforcing this, 96, 97 area as a true level of interest, right? We are above there now, okay? So next target is those former highs from 2018, call it 140, right? And we're high and tight here. So let's zoom in now. Try to get a little bit more tactical on this. We got this nice base breakout, right? I could easily draw an arc here. So we got the base breakout. Now we're above the breakout level, and we're high and tight here in this flag. So with something like this, you have a high and tight bullish continuation pattern coming off a base resolution. You really want to get in this name. The best advice is not to wait for a pullback to the base breakout level. You may never get it. You want to actually just buy on strength the breakout of this flag pattern. That happens at about 108, so we're about 50 cents away. The 108, that flag completes. Path of least resistance is very much higher from here, and we're targeting those former highs around 140 right here.
All right, here's a nice comment from Joe. Joe says, "Hi fellas, I'm long Straza, by the way." I think it's a reference to the morning show this morning.
I love Joe. Joe's my homie.
Thoughts on GDXJ, the Van Eck Junior Gold Miners ETF?
You know, there's been some damage there, Joe, over the past few weeks. Been some real damage. This one's hard. So we've been drawing support and resistance lines all over this thing. Let's get a little tactical here. Got these pivot lows from late last year, right? September. I'm sorry, from late 2021, September 2021. Those line up pretty nicely. It looked like we were kind of trying to get out of this base here, but now we're back in the box, right? Longer term, I think our level on this is in the lower 30s. But listen, I don't want to touch this thing with the way it's trading right now. We still do like gold and think it eventually gets that breakout. But right now, we're not moving in the right direction. It needs time. Gold is something we're staying away from here. So when you zoom out, yeah, it's still really about this 37.50 level. Pretty important there. Let's get back above those pivot lows from late 21.
All right. What do we got here? This is an interesting one from Sam Gatlin. GitLab, GTLB. GTLB, is it still over $1 billion, that company?
Isn't Google like the big investor in this one? Sam, do you know?
Oh, it's $5 billion. No, that's GitHub, isn't it? That's a different
GitHub, not GitLab. Okay.
That's not GitLab, that's GitHub. Yeah, okay. So the market cap is still up there. Actually, it's not nearly as low as I thought it would be by now, but still, I mean, that chart speaks for itself.
Yeah, listen, here's how we want to play these. You don't want to short tech stocks in the current market environment. We definitely don't want to short these things. If you can define your risk, you can bet on squeezes, okay? I don't like the short side for this group, period, right now. There's just too much fireworks going off. It's earnings season. You're seeing sympathy bids, across the board today in different groups. I don't want to short stocks, even ones that look like this. I would rather be a buyer here on strength, really well defined here, right? This little consolidation broke lower earlier this year. So like March of this year, and then it followed through lower. And now we're trying to get back above. The squeeze could be on if we can reclaim these pivot lows here. Call it $34, right? If you want to be safe, the pivot highs from the past few days, 35.50, right? Let this thing get back above these old lows, right? Reclaim this old support zone. Maybe we squeeze higher. I'd be looking at something like here. You got the pivot highs from March, call it $53.
All right.
Nice. It's really nice.
My mistake. Chat's correcting me. Yes, so you were right. Google is the investor in GitLab. Microsoft bought GitHub. That's what they did for like $7 billion. So
yeah, Google is the largest shareholder in this name, I believe.
Yeah. All right. Good question here from Yako. Straza, you went over Cisco. You said you want to stay away from it, but it looks to have a base that you like. Please take another look. Also, he's asking if you could maybe do a relative chart of Cisco versus the SCHD, the Schwab dividend, the most popular dividend ETF. I assume Cisco is a large holding of that. I don't know.
That's fine. I'll do that, but you want to be really careful what you use as your benchmark. Like I wouldn't benchmark Cisco or really any stock to the Schwab dividend ETF just because. Let's see, SCHD. I'm going to show you why. Schwab dividend relative to SPY. That's why. Okay, because you're not benchmarking to an outperformer, right? The Schwab dividend index is not great, right? This is it relative to the S&P. The more I zoom out, the worse it looks.
That's so interesting.
So you're benchmarking.
It's been one of the most popular funds in the last year in terms of inflows.
People are obsessed with dividends, and that's never going to change. I can't help a lot of people with that. People are obsessed with dividends. There's always going to be a bid in dividend stocks for that reason. stocks will always pay dividends, even though it's not the best option. They should be buying back stock instead of paying dividends, but they're going to pay dividends because they know investors want the dividends because investors are uninformed. It's a real problem. And it's not my job to fix that. So if we're going to look at something like Cisco, first of all, I could kind of see what you're saying with the base, trying to take shape here. Let me throw a 200-day moving average on this bad boy. Just do it right here. Okay. So here's Cisco. Let me get anything that we're not talking about out of the way here. How is this different from other bases that I like right now? Well, there was recently an oversold reading. That's not a characteristic of uptrend. See the oversold momentum reading here. If I showed you any other of these bases that we've been buying, momentum is not getting oversold. In fact, it's pinned near overbought here. Like here's something like DraftKings, right? Another one would be like Shopify, right? You don't see any oversold momentum readings. Okay. Here's Cisco. Oops. Oversold momentum reading just a few weeks ago. So not great. And then also what I would say about this base, I like the really clean bases, right? Because you know exactly where you want to define your risk, right? Something with like multiple touches on the base breakout level, super clean, like Corsair comes to mind. Look at how clean this Corsair chart is, right? Got 1, 2, 3, 4 touches before we go. I know exactly where my level is. See? Now contrast that with something like Cisco. Okay, we got a false start here. Then we fell back in the box and another false start, gapped lower back into the box. Now we're trying again. It's not very clean, right? It's not as clean as the others. So yes, I think you could say $50 here gives you that, reversal pattern resolution. You do have the 200-day slowly trying to curl higher. It is curling higher here. Again, I don't love the momentum trend. And I will chart it against the Schwab dividend portfolio or index for you just because it is a dividend stock and it's probably in there. It doesn't look terrible when you chart it against a dividend index, right? You are getting a little trend line break here. And that, that's to be expected because it's in the tech space, right? So it should be outperforming other dividend stocks. But if you chart something like Cisco versus the S&P 500, I mean, this thing's just terrible and it's been terrible forever. So let's zoom out and show that. I don't buy stocks that do this on a relative basis for too long, right? The stocks that I want to buy look like NVDA relative to the S&P 500. They look like that. So that's really what it comes down to for me. We're not simply just looking at these bases and saying, let's buy any of them. Let's buy any of these bases that are resolving higher. We are looking at the relative trends. We are looking at the, action, something like the momentum indicator, like we just discussed, but mostly the leadership, right? I want to see leadership. You just don't have it with Cisco. It's a messy name. It's a secular laggard. It's been an underperformer my whole career and long before my career began. There's 500 better names I could give you right now.
Cisco is proof that stocks don't have to come back and make new highs.
It's a no from me. And on that note, can I just talk some crap about Intel too?
That's also proof.
If you have Intel in your portfolio, it's time to capitulate, okay? Because what a disaster. So the entire semiconductor space is getting dragged higher today. Here's Intel down 7% on a relative basis. I mean, this thing just can't get out of its own way. It was in the best position to do what NVIDIA is doing today just 10 years ago, and it completely missed it. They stopped innovating. They just do their core business. They do nothing new. It's just, you want to stay away from these dead old legacy tech stocks, Intel, Cisco, IBM. It's a different time now. It's not the early 2000s. We got better options out there. So nope. All right,
let's pivot here. Justbit Trades is asking about CCJ, the uranium play. I haven't looked at this one for a minute.
Yeah, it's looking pretty good, actually, getting tight here. So with this one, I like to zoom out, look at a weekly chart. Okay. Got the fib here, and I'm going to leave it here. Okay, there we have it. Draw this one like this. You got a nice little like wedge thing shaping up here. All right. So this is a weekly chart. I've zoomed way out on here. I got the 2011 highs. Price has already retraced about 62% of this move. Typically, when you get that 62% retrace, you do go on to get the 100. That would put us back to about $45. I think you could be a buyer of this above the pivot highs from February. $30 is that level. You also have this nice little like wedge pattern shaping up here. And I would expect a nice reaction leg higher on a resolution of this. And $30 is really the breakout level for that as well. So I do like this one. And when you look through like the industrial metals or material space right now, there are fewer and fewer bullish chart patterns. And this is one that's still kind of holding and looks good. This is still a good option. And you have to go to those niche industry groups now, right? Within materials, it's like the uranium, it's some lithium names, right? It's the really nichey stuff. If you go to look at like a copper miner or any of these like basic industrial metals plays, none of them look really good. Let me just illustrate that quickly. This is the metals and mining ETF XME. I'm sorry for these dirty charts. That's why I went to the other format. But here you go, like metals and mining, JC and I have been talking about these short-term tops. This is no good, right? So it's like the largest materials subgroup besides chemicals. This top, look at this head and shoulders pattern, has completed, and now we got to be targeting these October lows. So there's still more than 10% of downside from this industry group, in my opinion.
All right. Essex Trading is asking about Dollar Tree, a bit of a disaster, down 10% today from their report this morning.
Yeah,
DLTR.
Yeah. We've been talking about it, Spencer, right? Like these retail names just been rough. And first of all, like how gappy is this stock?
Yeah.
Yeah. Look at all these gaps. Gap back, gap back.
So does that tell you maybe that they don't know how to forecast themselves?
Probably. Yeah, it's probably something like that, right? You know, there shouldn't be such big earning surprises in a company that's been around in the same business for so long. I mean, it's not like they're like reinventing the wheel over here. They're still a dollar store. So yeah, I'm surprised to see such big earnings reactions from a stock like this, even like 10% today. Here's the thing. I like Dollar Tree. I like their business. They're one of the better players in the space. We've seen these dollar store stocks perform really well over the years. Let me just zoom out to illustrate that, right? Like these are quality stocks. So yeah, I understand if you're trying to look for an entry here, you have the pivot lows, and we were just sitting on them earlier this morning, call it like 135. I'm okay with entering this at 135. I will say, unless this thing keeps rallying intraday and making up some of this lost ground, we are going to clock our first oversold reading since last August, which I don't love. Right? I don't like to see these oversold momentum readings. But yeah, if you want to, try and catch a falling knife, 135 is a level to do it at.
What about Amazon here for Kadir? I hope I'm saying that right in the chat.
Yeah, I like it. I like it a lot. Let me flip back to my... I got one for you. Does NVIDIA start passing out some of these mega caps in the market cap race?
Well, it's off to a good start today. So how far back is it of I don't have a list.
Pretty far back.
It's pretty far back.
It's $1 trillion. So it's way off from Microsoft, but I think it starts passing maybe Google and Amazon. And I think that's what we're in for. I mean, these guys are in some position for the future. So I think you eventually see that. NVIDIA is only going to get bigger. And
hey, credit to us. Do you remember what the name of last week's show was? I'll tell you.
No, what was it?
It was when will NVIDIA make new highs?
We knew it was coming, Spencer. We've been saying it, right? We've been saying it. So I got a big smile on my face today. Good for these guys. I will continue to say, if you're looking for a pure play in AI, that's as close as you're going to get. So, and dips will get bought aggressively in this stock in the short term. So anyway, we're back on Cisco. What was I supposed to be?
Amazon, but
I just keep talking about NVIDIA.
Yeah.
All right. So Amazon, look, it's got that nice base. This is the base we talked about, and I'll zoom out and show you why 100 is a key level too in a little bit. But really, if you're looking for a more tactical entry, you got the pivot highs here from February, and we're flagging right above them right now. 114. Again, you could play this just like, what was that one at the top of the call, the airline one, like Copa or whatever.
Copa, yeah.
Above the pivot highs of this little short-term continuation pattern here, about 118.50. You could buy that breakout, and I'd be targeting the August highs. That is the next stop for Amazon. all of these big tech, big growth stocks are going back to those August highs. In many cases, they're the breakout level for us. In this case, they'll be target 1. So that comes in about 144, 145. But let me just show you. Let me zoom out on this chart real quick. 100 was really a major line in the sand for Amazon, and it looks like we're finally comfortably above there, right? We had this nice little fail here, right, which resulted in a sweet bull hook higher. Now got the little bear trap down here below the 2018 2019 highs. You even had the pivot lows from second half or late first half of 2022 here. And it's that key psychological level of 100, right? So a lot of things coming into play. I think for Amazon, really the place to enter was on a reclamation of this 100 level. Like I said, if you're looking to get more tactical, I think you could use that like 115 level.
We're going to couple more here. Yeah. Couple more here. This is an interesting one. New one for me from Bill Knowles. TPL, Texas Pacific Land. This is a company that owns land that used for oil and gas refining.
Yes. This is ultimately like a royalty company in the oil and gas space. So really cool business model, very different and unique business model. No analysts cover it. Nobody ever talks about this stock. It's much smaller than a lot of the big boys in the space. This was one of our favorite stocks to talk about in 2021 and 2022 because all it did was go up, which you could see here. It was a huge leader in the energy space, but that's all come undone recently. Nasty drawdown off of just highs from late last year. Yeah, we're down over 50% now. This chart's broken in the near term. We've been out of it for a long time now. Like I said, loved it not long ago, but that's it. 2021 highs, 1,700. Got to get above there, and we're nowhere close right now. Let me just real quick see if we could find a retracement. I don't think you're going to get a retracement here. No, too late. So for all intents and purposes, we're probably heading back for a retest of these early 2022 lows. And that's a considerable amount of downside from here. I don't like it. You got to stay away from this. In energy right now, you stick with the offshore drillers. There's a few names that still look good. Typically, they're these drillers, but the rest of the space is really under pressure and remains under pressure.
What about oh, sorry, were you done? I'm sorry.
No, I'm done. I was just
okay.
More about
what about the Swiss athleisure company?
Yeah, you're getting a retest of this base breakout level, it seems like. Some of these shoemakers have been good, right? Looks like we pretty much came in, more or less filled this gap. I think you can enter here against 25. Keep it real tight. Keep a real tight stop. You don't want to own this if we fall back into this box, which happens below 25, right? But you have some serious price memory here from the gap up. Now you got the gap fill. You got the August highs. So this is nibbleable. I think you can nibble on this. Definitely. Did Decker's report today, Spencer? Decker's Outdoor?
Did they report today?
I think so. Also, some did not get oversold in on here. I'm pulling it up on my other chart. I could show you real quick.
Decker's is tonight.
Decker's is tonight. Okay.
Yeah.
Let me just point this out. So on got the big pullback recently, but look, momentum staying out of oversold territory. So I like to see that. You got the 200 moving average sloping higher there. All good stuff.
Here's one from Nikki. It feels like no one's talking about this one. And he's asking about Netflix. Doesn't it feel like no one's talking about Netflix?
Yeah. These streaming businesses are no longer in favor, right? Yeah, you got a clean level here. Let's get a fresh chart out.
No one's talking about that anymore. Everyone's too distracted with NVIDIA. Us too.
As it should be.
Yeah.
Listen, Netflix was one of the first stocks we were buying in the tech space last year. We were buying Netflix. We were long this guy right here. This was one of the first bases that broke out. We were super long, and our first target was right here. We were just looking for the gap fill. We got it fast. We got it before the end of the year, right? So still like it. The bias in this name is definitely higher now. It's really these pivot highs. So let's find some levels. I would bank on the next move bringing you back to this gap, right? And I think you could easily define your risk here for high probability trade. 374. Yep. So on strength above 373, 374, and then with a target back at 460, get you back into that gap zone. And really, if you want more, if it's going to get to 460, it's very likely to fill that gap and make it to about 507. So pick your poison there.
By the way, anyone in the chat, if you've gotten that email from Netflix that says that they're cracking down on password sharing, let us know. I haven't gotten it because I am one of those people that mooches a Netflix account, so I don't have my own.
I mooch too. I don't even know whose I use at this point. That's how the whole thing works. Like everybody uses my HBO account. I use their Netflix. Exactly. We use somebody else's Amazon. Like that's how it goes. And like maybe they have emailed me. I don't really read my emails too well, so we'll see. Maybe I get cut off. I don't know. But they should be doing that though. They should be doing that. You know, a lot of people are mad about that. No. If you're using something, pay for the service. They've even reduced their prices. Can't you get like Netflix with ads now for like $5?
You can.
Yeah, I'm not mad about it. Like I understand.
I pay $7 to get Hulu with ads. But yeah, I'll give you my Hulu. You give me Netflix. Sharing is caring, man.
If they're gonna cut us off one day, I understand that. Yeah, I get it. Hey, listen, that's the part of the cycle that Netflix is in, though, right? That should tell you something. Just as if you want to put on your fundamental hat and be a fundamental investor here, the fact that they're trying to pinch pennies now and go after people for password sharing, that's not a huge opportunity, right? This company used to have like growth initiatives and exciting new things. Now they're just trying to go after people who aren't paying, right? That's telling you they're at a very mature phase of their growth cycle.
It was a fun decade while it lasted. Right. Yeah. All right. Okay. So it's about 1:30. Let's hop here because we got to take a breath, and then we're going to do the spaces on Straza's Twitter account at @Straza at 2:00, where we'll talk NVIDIA, and then a little bit more NVIDIA after that. So that'll be fun. I'll be there for that. Steve will be there. Thank you to everyone in the chat for the questions. Every week we're getting more and more. So that's awesome. Keep them coming. There's going to come a day very soon where we won't be able to get to all of them.
And Spencer, tell them too, send over any comments, concerns, what you like about the show, what you don't like. We're in the very much in the feedback stage. We want to hear from you guys. And thanks so much for joining as always. Everybody.
People have been emailing us questions at stockmarketmedia.com. If you email it, it's on the screen. We see them and I respond usually. So email that. Thanks for watching. Smash the like. See you on Spaces.
Bye guys.